Welcome back to Investing Talk Podcast. Today, we're tackling a question quite a few of you have actually sent in. Is Emcor Group a good time to buy right now? We've gathered some comprehensive sources, financial filings, analyst reports, you name it, to really help us unpack this one. Before we get into the nuts and bolts, if you're finding these insights valuable, please do subscribe, like, and maybe leave a comment. It genuinely helps us out. And if you feel like supporting us even more, you could consider buying us a coffee. Also, if there's a specific company you'd like us to look into next time, just drop it in the comments below. We really do love hearing from you. Okay, Emcor Group. A pretty significant player, maybe sometimes flies under the radar a bit, specializes in mechanical and electrical construction, facility services too. We've examined its financials, its market position, valuation, and what the future might hold. So let's get started. Okay, let's unpack this. Our analysis of Emcor Group's fundamental health, it has to start with revenue and earnings, right? In a sector known for being, well, pretty cyclical, what did our sources actually reveal about their top and bottom line? What's the current standing?
Yeah, it's fascinating, actually. Emcor Group reported 2024 revenues of $14.6 billion. And that's not just a flash in the pan number. It represents really strong top-line growth. If you look at their official filings, you see this consistent year-over-year revenue growth. What's driving it? Well, high demand in electrical and mechanical construction, plus facility services. Those are their sweet spots. But it's not just about, growing revenue at any cost. They've managed to keep their gross profit margins stable and consistently above the industry averages, which really points to disciplined project execution. And their net income margin, it tends to hover in that pretty healthy 5 to 6% range. Management actually sounds quite bullish. They were projecting sustained earnings momentum, and they point to a really robust project backlog, that's work they've already secured, and a definite focus on expanding those margins even more.
Okay, consistent growth and healthy margins in construction. That definitely sounds like a positive sign. But digging a bit deeper, there are these growth drivers really sustainable? Or did the sources hint at any maybe warning signs in the project execution details that could bite into profitability later on?
That's a really crucial question. The sources highlight that Emcor's growth, it seems fueled by pretty structural demand. Think data centers, green energy projects, critical infrastructure upgrades. These aren't exactly fleeting trends, are they? And the stability of their margins, even with inflation pressures, it speaks volumes about their ability to, pass on costs effectively and manage these projects efficiently. They seem quite disciplined with capital expenditure and working capital too. So yeah, it looks less like they're cutting corners and more about being smart, picking high-value projects and running them well.
So disciplined and growing, that sounds solid. But how about their overall financial health? The balance sheet. Are they swimming in cash? Or are they weighed down by a lot of debt? That can be a real red flag for investors, especially, with interest rates being a factor.
Right, connecting this to the bigger picture, Emcor Group's balance sheet, looking at Q2 2025 data, shows an exceptionally strong liquidity position. They've got a healthy cash balance and what we call low net leverage. Basically, they aren't relying heavily on borrowing to run the business. Their total debt, it's well covered by their operating cash flows. And their interest coverage ratio, that's how easily they can pay the interest on their debt, it far exceeds industry norms significantly. They either have a net cash position, meaning more cash than debt, or just minimal net debt. Plus, they generate robust free cash flow supported by that disciplined capital spending and efficient working capital management we mentioned. It paints a picture of a very, very financially sound company, one that seems built to handle economic shifts, maybe even capitalize on opportunities when others are pulling back.
That stability is definitely a huge plus, especially in today's market, almost like a financial fortress, as you say. But does that financial strength come with any trade-offs? Like, does it make them less agile, maybe less aggressive in capturing market share? Or does it actually enable them to be more aggressive when the timing's right?
Oh, it definitely enables them. I'd say that strong balance sheet isn't just defensive armor, it's a strategic weapon. It gives Emcor the financial muscle to, say, make opportunistic acquisitions. The construction market is still quite fragmented, or they can invest in new technologies that smaller, more leveraged competitors, they just can't afford to. So rather than being overly conservative, it lets them be selectively aggressive. They can pick those high-margin strategic projects.
That's an interesting take, financial strength as a proactive tool. Okay, so good numbers are one thing, but in such a competitive field, you need an edge, right? What really makes Emcor Group stand out? What unique competitive advantages do the sources point to?
Yeah, this brings up the whole market leadership question. Emmer Group is consistently described as a market leader in mechanical and electrical construction. But the real secret sauce seems to be this combination, the synergy between their diverse project backlog, covering everything from data centers to hospitals, and their deep expertise in mission-critical systems. We're not just talking about basic plumbing here. They're installing the essential, complex systems that modern businesses and infrastructure rely on. That creates a pretty high barrier to entry. Their broad geographic reach across the U.S., combined with that technical know-how, gives them a persistent competitive edge. Our sources were quite clear. No direct competitor really matches Emcor Group's combination of scale and diversification. And that's what gives them resilience across different economic cycles. They've carved out this unique defensible niche, less vulnerable if one particular sector slows down.
That broad reach and the focus on mission-critical systems. It almost sounds like they're building the essential plumbing for other industries, the stuff everyone needs to function. Does that mean they're sort of insulated from, say, a slump in the housing market, or are there still wider economic ripples that could affect even a diversified company like Emcor?
Well, while diversification definitely offers significant protection, you're right, no company is completely immune. A really severe, prolonged economic downturn that hits capital spending across all sectors.
Yeah.
Yeah, that would certainly impact them. However, their focus on essential infrastructure, particularly in tech, healthcare, green energy, that tends to be more resilient than, say, speculative commercial building projects. Demand for things like data centers, hospital upgrades, renewable energy infrastructure often holds up better, even in softer economic times. So they're definitely more insulated than many of their peers.
Okay, makes sense. So they're financially strong, a market leader, got that defensible niche, which usually comes with a price tag, doesn't it? Great companies often trade at a premium. We always need to ask, are we potentially overpaying? Let's talk valuation. How is Emcor Group trade compared to its peers in engineering and construction? Is that premium justified?
Indeed. Let's look at the valuation metrics. As of late August 2025, Emcor Group's trailing PE, price to earnings, over the last year is around 24x. Its price to sales ratio is about 1.0x, and price to book is around 5x. Now, when you compare that to the engineering and construction industry medians, which are roughly a PE of 21x and a PS of 3.7x, and Emcor Group trades at a modest premium, suggests the market sees that quality and leadership position. However, it's interesting, leading equity research using discounted cash flow models actually places its fair value pretty close to where the stock is trading now. This suggests it's probably trading near its intrinsic value. And that premium, it seems justified by their better-than-average profitability, predictable cash flows, and that strong balance sheet we talked about. So maybe not a screening bargain, but it appears fairly valued for the quality you're getting.
Fairly valued for its quality. That's a really key phrase there. You're paying for what you get, not necessarily finding a hidden gem on the discount rack. But for those who follow the charts, technical analysis often gives a different perspective, doesn't it? What's the story the stock price itself has been telling us recently? What do the indicators suggest for the short to medium term?
Right, switching gears to the technical side. Emcor Group shares over the past month or so have been trading in a range roughly $580 to $630. It looks like consolidation after what's been a really strong multi-year uptrend. A natural pause, you could say. Key support where buyers tend to step in seems to be around the $580, $590 area based on recent action. On the flip side, resistance where selling pressure might emerge is up around $630, $640. Importantly, the stock is currently trading above both its 50-day and 200-day moving averages. That's generally seen as a bullish signal, suggesting the underlying upward trend is still intact. The Relative Strength Index, the RSI, which measures price momentum, is hovering around 62. That's kind of neutral to slightly overbought territory. It suggests this consolidation might continue for a bit longer as the stock digests its gains, but volatility seems moderate, which could support more upside if the sector stays strong.
Okay, so the technicals paint a picture of a stock catching its breath after a long run, but the underlying trend still looks positive, like a marathon runner grabbing water, maybe not hitting a wall. Now, beyond the charts and balance sheets, what's been happening with Emcor Group in the news, and what's the general sentiment? News and, public perception can really sway investor confidence.
While looking at recent news, back in August 2025, Emcor Group got reiterated as outperformed by major brokerages. That's a pretty strong vote of confidence from analysts. They cited things like ongoing infrastructure spending and that steady demand for green energy as key drivers. We haven't seen any significant downgrades recently, and analyst commentary generally remains positive, focusing on that strong project pipeline and their ability to expand margins. As for insider activity, Nothing really significant buying-wise in recent filings, mostly just routine option exercises and some small volume selling, which is pretty typical for executive compensation, not usually a major red flag. Social sentiment, scanning various platforms, seems neutral to positive. Emcor seems to have this reputation as a kind of safe haven within the sector during economic slowdowns, which suggests a certain level of trust.
Sounds like steady, quiet confidence from the market and analysts.
Mm.
Which brings us to a crucial point for any investment, the future. So what does all this analysis suggest going forward? Are there any upcoming events or maybe broader industry trends that could significantly impact Emcor Group's stock, either positively or negatively?
Absolutely, they're definitely catalysts to watch. Short term, the Q3 2025 earnings report that's scheduled for October 2025 could potentially bring an upside surprise. Given the current backlog and those margin trends, it's quite possible. Also, announcements of major new contract awards. With momentum in their key sectors, that's always a possibility and could boost the stock. Longer term, though, the picture looks really interesting because of these powerful structural tailwinds. We're talking about large-scale U.S. infrastructure upgrades, both public and private sector funded, plus continued investment in green energy and data centers. These are multi-year trends, and Emcor is just really well positioned to benefit. Oh, and one more thing, management commentary in recent investor calls suggests strategic acquisitions are definitely on the table, which could add another layer of growth.
Those long-term structural tailwinds, they really do sound like a solid foundation. But as always, every investment carries risk, right? No matter how strong the company looks. It's absolutely vital for our listeners to understand the potential downsides too. What should you be aware of when considering Emcor Group?
Yes, that's a critical point. Prudent investors always look at the risks, stock-specific risks. Well, their latest 10K filing, that big annual report, mentions potential margin pressures. Things like labor cost inflation, commodity price swings, these are constant challenges in construction, require really sharp management. There's also project execution risk, especially on big, long-duration contracts. Delays or cost overruns, they could hit near-term profits. Then you have the broader market and sector risks. A significant downturn in overall construction or capital spending, perhaps if the U.S. economy weakens substantially, that would hurt. And regulatory changes, too. Anything affecting infrastructure funding or labor markets could potentially create headwinds.
Right. So even with favorable macro trends, the day-to-day execution and cost control remain absolutely critical. Okay, so given everything we've discussed, the strong fundamentals, market leadership, that fair valuation, the technical picture, the future outlook, and these risks, what's the overall summary? The final investment thesis for Emcor Group. What's the bottom line for someone thinking about this company right now?
Taking it all together, our sources seem to converge on an overall rating around 8 out of 10 for Emcor Group. The rationale is, well, it offers this really compelling mix of stability, clear sector leadership, and pretty good earnings visibility. That modest premium valuation we talked about. It seems justified by the robust free cash flow, the low debt levels, and that strong competitive position which really sets them apart. The main risks boil down to that inherent sector cyclicality, although Emcor seems better positioned than most to handle it, and maybe some near-term technical consolidation. The stock might just trade sideways for a bit. So it probably leans towards being better suited for a long-term investment horizon. Near-term upside might be a bit limited given the recent run in consolidation. But those long-term structural drivers, infrastructure, green energy, they remain overwhelmingly positive and look pretty durable.
Wow, okay, that was a really thorough look at Emcor Group. It certainly sounds like a robust company, strong fundamentals, clear leader. Yet, as you say, the current valuation and technicals maybe suggest it's more of a long-term play. Not necessarily a quick win for those seeking immediate returns. It sounds like it requires some patience and conviction in those underlying trends.
Precisely. Yeah, the immediate upside might be consolidating a bit, but those underlying strengths, those structural tailwinds for U.S. infrastructure and green energy, they seem undeniable. So for investors seeking stability and long-term growth, particularly in a sector known for resilience, Emcor Group does present a compelling case. It's really about understanding the long game here, recognizing a company that seems built for endurance.
So what stands out to you, our listener? Is it Emcor Group's ability to navigate those economic cycles and capitalize on these multi-year trends a real testament to their diverse backlog and financial strength? Or, looking ahead, could unforeseen technological shifts, maybe new construction methods or materials, potentially disrupt even their long-term trajectory despite being so embedded in those mission-critical systems? Definitely something to ponder as you consider its place. Thank you so much for joining us on Investing Talk podcast. We hope this analysis helps you make more informed decisions. Until next time, keep learning and investing wisely.